This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about what you hear during our show today, just give us a call at 614-760-0670 or visit us online at safeharboroh.com. And while you're on our website, click on that radio page. You can check out some past shows and subscribe to our program on Apple Podcast, Amazon Music, Google Podcasts, or Spotify. Also, feel free to visit our YouTube page by typing in Safe Harbor Retirement Group to watch videos on different financial topics. And please don't hesitate to reach out to us if you have questions or if you want to set up a face-to-face or virtual meeting. And remember, all meetings are complimentary with no obligation. Well, what we want to talk about today is basically the understanding of what long-term insurance can actually, or long-term care insurance can do for you. Nearly 70% of 65-year-olds will need some type of long-term care services, as you kind of go through retirement. So it's something that I think we want to discuss on why you might need it, the options that you have out there. But as we know more than anything else, one thing that can really derail your retirement plan is going into some type of facility that could actually wipe out your savings. So before we dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
I am doing great, Corey. Thanks for asking. And this sounds like a really important topic. I've been busy and just looking forward to this new year and a lot of great new topics for the show. I'm excited about it. How about you? What have you been up to?
2023 is, starting to really ramp up here, Tony. Seems like just for whatever reason, the first quarter is always one of the busiest quarters that we actually have here at Safe Harbor.
Right.
Of course, we have a lot of clients that are retiring over here over the next couple months.
Yep.
It's a new year. And then just like anything else, there's a lot of people out there that are trying to build financial plans and get second opinions and things like that as well. So this is really a busy time of the year for us. I know we're going to be together here in the next week or so, for a kickoff, what we call the Gradient Summit. So, we'll be out in, Viva Las Vegas.
Yeah, big financial conference in Las Vegas. It'll be great to see you out there, Corey, and we'll hang out and hopefully learn a lot and meet with all the top advisors from around our country. We'll be there, and I know you'll be sharing some things with them, and they will be gleaning your knowledge, your vast experience and knowledge. I think that's awesome, and we'll try to have some fun as well. I'm not a big Vegas guy, but it's a fun place to visit, I guess, right?
It is. I'm not, you only can handle a couple days of that out there.
Exactly. It's pretty intense, especially if you're not a big gambler, and I am not. So,
yeah.
But it's neat to see, and I've been there a couple of times before. Actually, usually business trips, what takes me out there. But might try to see a show. I might catch Penn and Teller. Gonna try to see them one night, so that should be fun.
Yeah, I think that's always good to be able to maybe go out and get a show.
Yeah.
Ohio now has gambling, at least for sports betting. So
that's true.
You don't have to go to Vegas to do that anymore. You can do it right online. Anyone out there that is a gambler, just watch how much you spend more than anything else.
Yes, exactly.
I like all the new radio commercials here in Columbus about it. You can call 1-800-GAMBLER. If you have a gambling problem.
Yeah, they have to run those disclaimers and tell people how to handle gambling problems. Some people can't handle it. If they win, they just get addicted.
Yeah,
and like anything else, addiction to anything is not good,
Yep.
you and I place just fun, friendly, like, hey, I'll bet you $5 on this game if our teams play each other. But
yes.
In fact, speaking of that, I'm pretty sure you owe me some money.
Yeah. I'm sure. Probably so.
No. So we have to switch gears and get serious here, Corey. I mean, long-term care costs so much money. It really has derailed a lot of people's retirement plans. I know you do your best to help your clients make sure they're prepared. Where do you want to begin with this topic?
As I mentioned earlier, Tony, about 70% of Americans who reach the age of 65 are going to need some type of long-term care. And out of that 70%, 50% of them, are probably going to have some type of family member that's going to take care of them, right?
You're right.
Which means the other 50% is going to have to come out of, people's pockets. A couple other facts, about 24% is going to need, a little bit more than 2 years of paid care, and about 15% are going to need a little bit more than 2+ years in a nursing home. And if you kind of look at, the breakdown between, women and men, men only require about 2.2 years. Women's a little bit longer, about 3.7. A lot of it has to do with, they're also living a little bit longer as well. Right. But, I think one of the big reasons that people want to be able to have some type of long-term care insurance is really to kind of protect their savings, right? And if we kind of go back and if you kind of just look at home health care aides, that's one option. People have, people come in and take care of them. You're still looking over, around $54,000 plus that it's going to cost you on an annual basis. If you have some type of, adult day health care, it might be only about $19,000 a year. If you go into assisted living, and you have your own private room, you're talking around $51,000. And then once you kind of step up into that nursing care, then you're really getting into that $93,000 plus. And of course,
I think it starts at, around here, it starts at $6,000 and goes all the way up to $12,000 if you need like full-time memory care, right?
Yes. Yeah. So, of course, one of the things that you want to be able to do with those types of numbers is, we know how much it's going to cost now, and, it's probably going to go up 5 or 6% per year. It's probably going to be higher than what the regular inflation rate's going to be as we kind of go through this. But, this is one thing that can really, derail your savings account if you're not actually protected, by this. So, when we actually design, I guess, financial plans, Tony, I know a lot of people out there sit there and say, well, if I give any money to the kids, awesome. If not, it's, this is why I worked and I want to be able to spend all the money I have. But when we start, designing financial plans, we want to be in a situation where you're going to have a few $100,000 left when we start kind of projecting out to those, 25, 30 years in retirement. Of course, we, as an advisor, I never want to be in a situation where you're going to run out of money. And again, one of the things that can really derail that is if one of you goes into a nursing home. And let's face it, not only can your savings be wiped out, but let's just say you're also receiving Social Security. Now you're going to go from 2 checks to 1, and it can really put a strain on that remaining spouse. If you no longer have any money for them to be able to live off of.
Well, yeah, exactly. And, I'm going through this with my parents. My mother has Parkinson's. She's in long-term care, and she is in a facility that costs about where she's at, the care she needs, it's about $6,000 a month. And so we're trying to find ways to make that work for my parents. They did not, they weren't working with someone like yourself, and they did not have, a good enough retirement plan in place to cover long-term care or a plan for long-term care. And it is crucial. I can't tell you how much they wish they had made a plan, and it's just such a headache and a mess if you don't. And there's a spend down, and then if the government, if Medicaid does kick in and the state helps cover it, then eventually somebody has to pay back that money if there is ever any money. Otherwise, you have to go broke before they'll help, and Medicare doesn't cover it. So, it is a problem out there.
Yeah, I think you bring up a pretty good point there. In some cases, Tony, especially if you're dealing with your parents, right?
Right.
You'll probably do everything that you possibly can, potentially not to actually have them go into a facility that does accept Medicaid. But if we start talking about Medicaid, that means basically your entire savings has been wiped out.
Yeah.
Right. So in a lot of cases, you don't want to go into a Medicaid type facility, as you mentioned earlier. The other part of that is Medicare doesn't pay for any of this. And I think there's a misconception there as well for a lot of people out there.
Huge. And that's where a lot of people get into trouble. I always thought Medicare would help cover long-term care, and a lot of people do, but it does not. So
that's correct.
Yeah.
And if you kind of go back and just kind of look at it, over time here, back in 2000, there were over 100 different insurers or insurance companies that were actually selling long-term care policies. And if you look at that today, there's only about 10 to 12 insurance companies that are kind of doing that old type of long-term care. So a lot of people got out of that. And of course, one of the largest ones, which was Genworth, they really suspended sales of individual long-term care insurance through agents and brokers in March of 2019. So what we have seen over the last few years is a shift. In the old long-term care policies that many people have, because I see a lot of people that have them. They come in, and of course, every year it seems like their rates are raising. And they always have that decision: do I keep paying the rate increase, or do I lock in, or do I not get it, or anything like that? And of course, the one thing that I think a lot of people hate out there is the old long-term care policies. It's kind of like you either use it or lose it, right? You pay all these premiums for your entire life, and if you happen to pass away, it's done. You never used it. You never got anything like that. And one of the things that's kind of, taking place over the last few years is what we call those hybrid life insurance policies. So those hybrid life insurance policies you can do a couple, you can do a different few things with them. One is, which is popular if you do have like extra cash around, is you can throw a lump sum in. You're done paying for it. And in many cases, they can grow, your care at 3 or 5% per year. So for example, say you throw $50,000 down and let's say you're 60 years old. You might start out with about $170,000, $180,000 worth of long-term care, but it's going to grow at 3 or 5% per year. So by the time you're in your 80s and, late 70s, early 80s, it's worth potentially, $300,000, $400,000. That can actually be used for long-term care insurance. And the nice part about that is there's a lot of out there where you might be able to get a return of premium. So if you do need the money for whatever reason, 15 years from now, you might be able to pull the majority of the money that you put into it back out. But if you don't use it, then there's a life insurance benefit that actually is going to end up going to your beneficiaries as well. So you're going to use it one way or the other. And again, the nice part about that is it's a lump sum. You pay it, and you're really done with it.
Yeah, and cash value where you don't lose it is a great option. Obviously, I think that's what they hate about the old traditional long-term care insurance is it's costly, and you're never sure if if you don't use it, you lose it. So
right,
that's tough. But there are a lot of other options out there. I know that a lot of insurance products and retirement vehicles like fixed index annuities have riders that can kick in if you need long-term care. So there are options out there, at least for folks, right?
Yeah, there are. And one of the nice parts about, I just talked about the lump sum. You can also do another one where, you can pay a annual premium or monthly premium, whatever, how you want to be able to do that. And it's kind of like also life insurance. So it's a permanent life insurance policy. And the nice part about that is now you get a death benefit. You might have some cash value in there, depending on what option you want to go with. But then you also have long-term care insurance as well. And when we start talking about long-term care, when we start talking about these new products today, one of the things that that you have the option to the way they actually work is you don't have to go into normally a nursing care facility in order to do that.
Right.
What they're actually doing now is if you can't normally perform at least 2 of the 6 what they call the daily activities, like bathing or dressing or eating or toileting or transferring, if you can't, if a doctor says that you can't perform 2 of those functions, then you can go in and actually trigger some of these options. So if it's a life insurance policy, they'll start paying you that monthly premium. And of course, just like you mentioned a second ago, if you have an annuity where maybe you're receiving a lifetime income stream, they might be able to double that income amount. So say, for example, you're getting $20,000 a year, from that annuity. A lot of them will actually allow you to double that income up to 5 years, as long as there's still money left within that particular, product as well. So it's definitely something that if you're worried about that. And one thing that I do see more than anything, Tony, is a lot of times it's going to be the women that's going to be more worried about it for the fact that they're living longer.
Right.
And if they don't have a spouse there, that spouse can't take care of them, and they don't really want to put a burden onto their kids. So those are the ones that are really more worried about it more than anything else.
Yeah. Well, and that's a good point as well. It does affect women more because you go into long-term care centers and there's a lot more women typically than men in there because women typically outlive men. And so that's even more of a concern. But, it's getting to the point where more and more people need long-term care. So chances are you or your spouse will need it. I think the key is having a plan. Let's take a quick break here, but before we do, Corey, let our listeners know how they can get a hold of you.
No problem, Tony. For our listeners out there, just give us a call at 614-760-0670, or feel free to just visit our website at safeharboroh.com. You can schedule a complimentary, no obligation meeting with us, whether you give us a call or visit our website to schedule that. One of the things we can definitely do is show you the different types of options that are out there for long-term care, as well as provide you pricing, and just to be able to, for you to be able to see what that's really going to cost, in order to potentially save some of that savings later on in life. And the other part of that is if you don't have a financial plan, we can put one in place for you. And again, just like we talked about earlier today, one of the things that can really wipe out your financial plan is if you actually go into some type of long-term care facility. And we're really here to help and guide you to make sure you make the right decision when it comes to long-term care insurance.
All right, and we'll be right back with more of Financially Fit Radio right after this.
There are 96 different months you could file for Social Security benefits. There's over 9,000 combinations if you are married. But that's not all. There's advanced filing strategies that can also be used. By the time you factor it all in, there are over 20,000 calculations that need to be run to find the best way to file for Social Security benefits. To request your complimentary Social Security Maximization Report from Safe Harbor Retirement Group, visit safeharboroh.com. The Social Security Maximization Report will tell you exactly what to do and exactly when to do it.
Hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. Well, today we've really been kind of just talking about some of the basics of long-term care. And one of the other things I think we want to spend a minute or two here on, Tony, and that is when, this is always a question I receive when people come in, is when should I actually get long-term care insurance? Or, like a hybrid we talk about with life insurance or anything like that.
Yeah, when do you need a plan in place for long-term care insurance, right?
Yep, and I really think they need to understand more than anything is the day that you actually meet with us to discuss it is going to be the lowest that the lowest premium that you're ever going to pay, right? Because let's face it, your age and your health has a big impact on what that cost is going to be. So, so someone that's coming in at age 60 versus 65 versus 70, it's only going to get more expensive every year that it goes by. The other side of that is just from a gender standpoint, women are going to pay more than men for the fact that they probably live longer. And like we mentioned a little bit earlier, the odds of them probably going in a nursing home or some type of care is going to be a lot higher than it is for a male as well.
Wow. Well, yeah, that's a good point you bring up once again. So obviously timing is of interest to people. You know, when do I need to have long-term care insurance? I think you need a financial plan that includes long-term care early on. The sooner the better. It's like, you know, when's the best time to plant a tree? Well, 20 years ago.
That's exactly right.
Second best time is right now. So it's never too early to meet with somebody like yourself. I think the key with long-term care is don't try to figure something out on your own, because you need somebody who can look at your overall picture, everything to do with retirement, to do with your healthcare needs and costs, and your overall financial situation, to figure out what the best option for you as an individual would be. I think that's the key here, isn't it?
It is the key. And let's face it, here's another part of it, Tony. You know, of course, your health is a big part of this cost too, right? We all could be healthy today. And I've been in situations where someone's healthy today and they go, you know what? I'm going to wait a year or two before I actually apply for this.
Right.
And the next thing you know, A, they get cancer. B, they have some type of heart attack or a stroke. And the next thing that you know is you can't qualify for it a year from now. So, you know, if it's something that you're really interested in learning about and being able to protect, you know, the best time to be able to do that is today, because we don't know what's going to actually happen here in the future.
Exactly. And that's a concern. Well, this has been a great topic. We just have a couple of minutes left. Is there anything else you wanted to touch on?
You know, the one thing that the last thing I'm going to kind of talk about with us is one of the things that we're an independent financial firm.
Sure.
I'm not tied to any particular company. So the nice part is when you do come in and we sit down and start kind of designing what kind of plan you have, and it doesn't matter whether it's just regular life insurance or whether it's a life insurance with a long-term care rider onto that. One of the things we're able to do is we're able to go out and really find the best type of rate for you. I think that is huge. So, you know, we're not tied to any particular brand. You know, we're going to make sure that the company is a solid company, of course. The other thing we want to look at is whether or not you actually, it's called indemnity. And what I mean by that is if you have an indemnity type of insurance, that means we can just trigger that. There's some out there where you actually have to send receipts in order to be able to get reimbursed. So I think that's another positive that we you know, that's something that we definitely try to do for our clients, is put them in a situation where not only, you know, they're going to have the best rate, but also it's going to be a situation where you're not going to have to do a whole lot, you know, once we actually activate the policies as well.
Right. There you go. Well, I think that's huge. Now, we're very close to being out of time. So before we go, though, let our listeners out there know once again how they can set up that complimentary, no-cost, no-obligation consultation.
No problem, Tony. For our listeners out there, just give us a call at 614-760-0670, or you can always visit our website at safeharboroh.com. And again, when you do call and schedule, just remember the meetings are complimentary. There's no obligation when you do meet with us. You know, we're really here to help and guide you to make sure that you're going to have the best retirement that you can. That's being able to put together a financial plan, make sure it's in place for you. And of course, part of that financial plan is going to make sure that you have the coverage that you need for long-term care. So again, just give us a call at 614-760-0670, or just visit us online at safeharboroh.com.
All right, thanks. And that does it for today's episode of Financially Fit Radio with our host, Corey Sickles.
Join us again soon for another episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com. Corey Sickles and Safe Harbor Retirement Group are not affiliated with or endorsed by the Social Security Administration or any other government agency. All matters discussed during this show are for informational purposes only. Each individual situation may vary and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation.